Well, happy holidays from the National Real Estate Cafe with Don and Gino Franti for your daily dose of real estate market updates. You see through the candy canes, we're getting into the spirit because it is the season.
And when it is the season, there's two things you don't want to be. You don't want to be the Grinch, and you don't want to be Scrooge. So make sure you keep a smile on your face for the whole month of December.
And you can do that by texting NREC to 58885. We'll make sure we make you laugh every day as best as we can and give you regular updates of what's really happening in the economy. And let's start off today with what's going on with interest rates, Gino?
Well, interest rates are happy. They're giving you a little bit of a gift for the economy, right? A little bit of a holiday cheer, we'll call it.
I like that holiday cheer. So let's look at the first report. And this is what we call the mortgage-backed security or bond report. And this basically really tells you what's happening with interest rates. 10-year Treasuries give you an idea, but it isn't directly proportional to where long-term interest rates are.
So Don likes to say green is good, red is bad. You see a lot of green on this chart, which tells you that good things are happening and rates are continuing to improve. But why?
Yeah. Is it the Starbucks cup that isn't very Christmassy? I don't think so.
No, you know, Don, we laugh about this all the time because I saw a lot of people complaining about the cup, but I never saw any people on my Facebook actually complaining about the cup.
No, because I like what's in the cup. That's
right.
What matters. So our cup is always half full anyways.
That's right.
So why is the interest rates improving a little bit? We've been watching the economy very steadily, and we're seeing what's happening and seeing whether the Fed's going to raise interest rates in December 16th or not. So let's look at this first report here. This is one of the precursors of why the interest rates have improved some.
Yeah, so this is probably out of all the reports that Don and I break down for you every single day on nrecafe.com, is we look at this one as the only one that's got a true negative trend. It's slightly concerning because it's below 50, which means manufacturing is retracting, Don.
That's right. If you look at this chart, we were as low as 32.4 back in January 2009, went up to 89, 90. We had some really good numbers and slowly been slipping away. So our concern here is that manufacturing is decreasing a little bit.
Now, I've got a very...
Could be job layoffs.
It could be. It could lead to, but I have an extravagant story as to why that's happening. It's possible that now with drop shipment, which is what a lot of people are able to do, manufacturers don't need to manufacture enough for retailers to hold inventory. So maybe they don't have to create as much inventory. So maybe we're in a world where less manufacturing has to happen, which no doubt will still affect the economy.
All right, then let's look at this next chart then. Uh-oh, deja vu. Another report based regarding manufacturing that was a little low. And you can see we had the trend is coming down. And we're below 50 again, so there's some concern. But then again, it could be because inventory levels were so built up they may not need to make as much because they're already prepared for the holiday season.
Yeah, so this is an interesting thing, and this is the only item of concern that we've seen so far. Jobs look strong. I believe retail sales are going to be strong.
Housing's amazing.
Housing looks great. So really, this is the first sign that something could be happening here.
Yep, so make sure you stay tuned so you will know if this trend continues and whether we have some real concerns or not. I don't think it's going to stop the Fed from raising interest rates a little bit. So you want to check it out daily, and you get this sent to your phone by texting NREC to 58885.
Or if you like email, check it out at nrecafe.com.